Hello everyone, today I will explain you the best trading setup that you will find for trading Forex, Bitcoin and the stock market. I firstly want you to read this disclaimer. The information provided in this video is no financial advice or any trade advice. It should be used at your own risk and is for educational purposes only. I will dive into this chart first, Euro, Australian dollar, USD. And the first thing that you need to look for on the weekly is your liquidity levels. So here you have previous week a high. So you place that on your chart, previous week high and previous week low. Both of these levels are a liquidity level, previous week low. Then we dive into the daily chart. On the daily chart, we can find a liquidity level here, a swing high, liquidity level, and also previous day high. So this is a previous day high. Once you are above both of these levels, or once you are above basically the liquidity level, you dive into even the 15-minute chart or the 1-minute chart. And now I will explain you the setup on the 1-minute chart. So the setup goes like this. Once you are above a liquidity level, you look for your key higher low. So your key higher low is the low leading towards the high. So you place this as your key higher low. After we break with force, you look for a fair value gap. So a fair value gap can be seen here. So this is the FVG and here. So I will explain this gap. What happens if we break with a strong candle to the downside? It creates a gap. You look at the left candle, the low. This is the high of the gap. And then the right candle after this candle, this is the bottom of the gap. Once it trades into this gap, you can short it. So to draw this real quickly, you look for a break of key higher low leading towards the high. Sometimes it will be like this, and you look for a strong move to the downside. This will still be your key higher low because this was so strong and leaving a gap open. But the best trades are taken like this. It breaks down, it creates that gap, and then you short it. But it has to be above liquidity zone. So to show you my executions here. Straight into that gap, I shorted. Then I took profits on the first momentum candles. So the first momentum candles that it goes down, you take half your profit and you place your stop loss in profit. So now you cannot lose anything anymore. And then you take profit, and you leave a little position open. So I'm still in a little position looking at a target around here. Now let me show you the same setup on the weekly chart of Bitcoin. So you can trade it on the weekly chart, the daily chart, or like I did on a 1-minute chart. You can trade it whatever you want. But basically you start with where is the liquidity zone. So once we were here, you see this low as your liquidity zone. You basically have equal lows over here and this low. So once we come down and take that liquidity, we can look for the setup. So right here, what would be your key lower high? Because now it's the opposite. Now it's buying. So you look for the previous swing high leading towards your low that took liquidity. So this would be your key lower high. And then you can see it breaks with full force above that key lower high. And then look what happens. It creates that fair value gap. Once it trades into that gap, you can long and you place your stop loss below that level or in profit as you want. So it's the same setup, but on a weekly chart. Now let's dive into the daily chart. So this is the daily chart of Bitcoin. Once you are here at the top, you look for where is the liquidity. So I said previous week high, previous week low, or previous day high. So here, previous day high was a liquidity level. Also because you have 1, 2, 3 days around the same price. So then you dive into the 15-minute chart over here. And you look for the same setup. You can even go on the 5-minute chart if you want to like trade this with precision. So once you are above this previous day high, once you are above that liquidity level, see what happens. So in this example, you take this as your key high or low. As you can see, it didn't reach higher, but you can see the power of this move to the downside. And it leaves you a gap. Basically 2 gaps here. You can see this first gap as one and then another one. So once it trades back into the first gap, if you have 2 gaps, once it trades back into the first gap, you can short it with a stop loss over here. And it is important that it's above previous day high. But let's just say that you've missed it. You are still in a liquidity zone. So you look at the 15-minute chart. Let's see if we can find the same thing on the 15-minute chart. Okay, right away, we can see this as the key high or low. Why? We are above liquidity zone and you can see the power in this candle. What happens? It leaves you a fair value gap. And what happens? It trades into that gap, holds as resistance. So it's important that it holds as resistance. So you need to wait a little bit before the market shows, okay, this is resistance, and now you can short it. So the same setup again. So you can delete this one. You are above a liquidity zone. You have key high or low. It breaks, leaves you a fair value gap. And you can also see this as a left shoulder, a head, and a right shoulder. If you go back on the Australian dollar, you can see that it also created a left shoulder, a head, and a right shoulder. Let's move on to the stock market. So for the stock market, this is the daily chart. I always watch the daily chart first. So basically what I can see here, previous day low, previous day low, and here you have another one. So you have 2 lows from previous day. And what you can see on this daily chart, it took both of these. So you dive in to the 5-minute chart. What happens? Let me just delete this one. Take key lower high, like that. Key lower high, and then you can see this huge move to the upside. So it already took liquidity. So it's important, it has to take liquidity. It took liquidity. It breaks your key lower high with force and it leaves you again a fair value gap. And guess what? I'm going to show you the executions on this one. But I used this chart from the ES. Same chart. There you go. So we were above, or we were below liquidity level over here. On a 5-minute chart, what happens? Key lower high, break, and then came back into this zone, and I longed. I took it on a closer chart, on the 1 minute chart. I was looking on a 1 minute chart, and I've longed a little bit higher, because the reason why, you see this little gap in here. After breaking your key lower high, it broke and it made a little gap in here. So I took this trade once it traded into that gap. Of course, I knew on the 5 minute chart it could go a bit lower, but my stop loss was below that level here. Then here I took profit. Let's go back to the daily chart of Bitcoin. I've traded 8 trades in here, all winners, basically with the same tactic. So let's say that we were here. This was your liquidity level. Previous high, previous days highs. Let's dive into the chart. 15-minute time frame. Here, what happens? We took liquidity, broke, even here, this key higher low. So it took liquidity, breaks key higher low, the one leading towards the high, and then you see a powerful candle. What happens in this powerful candle? You see a gap, fair value, gap, and boom. Trades into that gap, and it rejected all the way to the downside. I always scalp on a lower time frame, but you can do this on the daily chart, on a weekly chart, but I like to trade this on a lower time frame. So I enter into the fair value gap, place my stop loss and profit. Once it goes my way on the first momentum candles all the way down here, I take my profit, half my profit, and I place my stop loss in profit. Rinse and repeat.